you ready to elevate your accounting game and streamline your financial and accounting operations? In this video, we take a deep dive into the core principles or concepts of accounts payable, the backbone of every successful accounting and finance department. Whether you're a seasoned professional or just starting out, understanding the accounts payable fundamentals like invoice processing, three-way match, payment terms, and internal controls is critical to avoiding costly errors and improving cash flow. In an age where automation, AI, technology, and ingenious frauds are commonplace, everyone needs to be on their toes, whether you work in, manage, or simply have responsibility for the accounts payable function. In this fast-paced section, we not only review the processes from a best practice standpoint, we investigate the new challenges of technology, AI, new regulatory issues, and fraud, and their impact facing every organization today. Let's get started with a quick overview of the process. Responsibility number one, receiving and verifying invoices in a timely manner. Seems pretty straightforward, right? But it's not. Even the task of receiving invoices has now gotten a little bit more complex. Suppliers email their invoices, they send invoices through the mail, through the postal mail, and some of them fax them. And what's more, some of them do this more than once, and some of them will send copies to more than one person. So the simple task of receiving invoices has now gotten more cumbersome because there are more copies of the same invoice, and it is important that these duplicate copies be weeded out so they don't get paid twice, number one, and number two, so your staff does not waste a lot of time processing an invoice that is ultimately going to not get paid. How bad is this problem? About 25% of all invoices received today are duplicate copies. And they're not duplicates because people haven't paid yet. They're duplicates being sent for the first time. So huge task. The next issue I talked about is verifying invoices in a timely manner. You would think that the invoices would come in and they would be accurate, but that sadly is not the case. Oftentimes there is a discrepancy, and so the accounts payable staff, number one, has to get the invoice approved, so they send it out for approval to the person who ordered the goods, and then when that person approves it, they have to make sure that it's accurate. Now you might be wondering, well, why doesn't the person who approves the invoice also check and make sure it's accurate? And we could talk about why that doesn't happen, but at the end of the day, in most organizations, it doesn't happen. So it falls back on the accounts payable staff to verify that the invoice is accurate and also that it's not fraudulent, by the way. And you'll hear a lot of talk about the proverbial three-way match. And if you're interested in more details about the three-way match, we've got a whole series of videos on that topic, and I'll link to them in the description. Okay, responsibility number two, which I've kind of already alluded to, is paying bills correctly. Now, in the corporate world, we use the word invoice instead of bills, but that's what we're talking about. So we've already talked about verifying that the invoice is accurate, and also now that you don't make a duplicate payment. Now, many people at first glance, when they hear about duplicate payments, they think, nah, how much, it's not that big a deal. The vendors will return the money. Well, that's not entirely true. In fact, that's only true in a tiny percent of the case. Most vendors will issue a credit memo, and that brings up a whole nother set of problems about you have to identify them, you have to find them, how do you process them, all of this is extra work. And some of them do issue the credit memos, and then the credit memos just get lost, and your accounts payable staff never gets them, and they're not aware of them. And still others don't issue the credit memos, don't return the money, and hope that you never realize that you paid twice. So this creates additional work for the accounts payable staff because they have to, on a regular basis, look for these duplicate payments. And some of this has gotten exacerbated in the last few years because we now have all these duplicate copies of invoices, mostly thanks to email, because it's so cheap to send an email. It's not like putting an extra copy of the invoice in the post mail. Along with all of this that we've been talking about, these operational problems, many organizations organizations are now trying to move their payments from paper checks, which there's another whole host of problems associated with those, to electronic payments and some P-card payments, but mainly ACH, and that takes a whole lot of extra effort. So what seems like a simple task is actually quite complicated. Now, I realize that I've just provided a high-level overview of these two very important functions, and we've got more information. Obviously, it's a lot more complicated, and we did a 3.5 video on learning about accounts payable, and I'll put a link to that video in the description for those who want to watch it after this so they can get more detailed information. Okay, responsibility number 3, fraud protection. And when I say fraud protection, this includes both prevention, making sure you don't fall for a fraud, and detecting it so you don't fall for it, and then the follow-up afterwards to make sure that you haven't, and if you have, to try and recover that money. So all this takes time, effort, and a lot of it falls on the staff in accounts payable. Did you know, by the way, that accounts payable is often the first line of defense against payment fraud? They're also the primary target for many of these payment processes. If you're not watching closely, be aware that the fraudsters are, and so they will find ways to manipulate into your funds that you never thought of. If there is one tiny weakness in the process, sadly, they'll find it. And by the way, when we're talking about avoiding fraud, we're definitely talking about your money, but we're also talking about data, okay? Criminals realize that they can convert data into money, and so they're also looking to get your data. And so what falls on the shoulders of many accounts payable departments are becoming aware of new frauds as soon as they happen, alerting everybody to it, and making the necessary changes to existing procedures so that you have the necessary protections in place to prevent the fraud when it happens again. And it will. They'll try you again. There's probably nobody listening whose organization has not been targeted by fraudsters at least once, and most of us many times. Okay, responsibility number 4, regulatory compliance. This has become a huge issue. Ignoring regulatory issues can lead to massive fines and legal troubles, and a lot of these are related to your accounts payable function, and you need to make sure that you are compliant with all the latest rules. Addressing these increasing number of regulatory issues around the entire payment function can be a massive responsibility, and it's one that if you've never had responsibility for the accounts payable function or never worked in it, you may not even be aware of it. What am I talking about? Issuing 1099s, a huge issue in January, February, and when I say 1099s, I not only mean on the federal level now, many states have their own 1099 reporting requirements, making sure that the proper sales tax is accrued and paid if it has to be, doing the necessary unclaimed reporting and remitting, which I have to tell you, many companies don't do, and compliance with the Foreign Corrupt Practices Act, which I call Don't Bribe Foreign Government Officials, and OFAC, which I refer to as Don't Pay It a Terrorist, and certain industry-specific guidelines such as the Sunshine Act for the pharmaceutical industry and conflict minerals reporting requirements for those who are using conflict minerals. And as I've already alluded to, there's been an expansion of the 1099 reporting requirements because now many states have their own requirements. So massive change, and it is necessary that you keep up with it. The next responsibility I want to talk about is data analytics. Now, this is not something many associate with the accounts payable function, yet your accounts payable group has data that can be a gold mine of business intelligence. And in fact, smart companies are using this, and I know of several instances where the CFO, when he or she needs information, they go directly to accounts payable to get it. The companies that are using this data effectively are gaining a serious competitive edge. In accounts payable, the pros like to say, a good invoice gets a good payment. Let's take a closer look at exactly what they mean by that. But what makes an invoice good? It's a lot more complicated than it might seem. Best practice accounts payable teams look at 8 different factors. Let's look at them together. Factor number 1, the invoice is not fraudulent. Now, you might be sitting there saying, duh, of course a fraudulent invoice is not a good invoice. But determining what invoice is fraudulent and what invoice is legitimate is not as simple as it seems. We're going to talk a little bit further on about how you do that, but just know that weeding out fraudulent invoices is not so easy. And criminals have gotten really good at creating invoices that look like they're legitimate. They impersonate legitimate vendors. They know who you do business with, and they set up vendors that have similar names, and they send in invoices that look like they're good. So your team has to weed them out. Factor number 2, it's not a duplicate invoice, because if it's a duplicate invoice and it gets paid, that's a payment that you shouldn't have made, and recovering that payment takes a lot of time and effort. This has become a huge issue in recent days as suppliers take advantage of the affordability of email and the ease of technology, and many of them, in fact 25% of them, are sending out multiple copies of their invoice. So weeding them out has become a big task in many accounts payable organizations. This is why we make such a big deal about closing out purchase orders and receivers as soon as they have been processed and used, so that they don't get used a second time. It may seem like a little insignificant issue, but it's actually a huge one if you want to make sure that you don't pay an invoice twice. Factor number 3, the vendor has been set up in the master vendor file. This is important because most accounts payable teams will do several verifications related to a particular vendor, and they do this before they make any payments. And so the vendor should be set up. Oftentimes it's not. And so when the invoice shows up in accounts payable, before it can be processed and go through all the verifications and approval steps, the vendor has to be set up. And like I say, it takes a little bit of effort. It's also one of the ways that your accounts payable team is able to identify fraudulent invoices. For if a fraudulent invoice comes in from a supplier who you're not doing business with, i.e. a phony one, then they'll be able to partially figure that out, at least, because the vendor won't be in the vendor file. But remember, criminals are really good at impersonating legitimate vendors. So sometimes they'll create a phony vendor with a name that's very similar to one that you're doing business with, because they're trying to trick you. Okay, factor number 4, and this is actually part of setting the vendor up in the master vendor file, or at least it should be, and that is that you've gotten a W-9 from the supplier, assuming it's a U.S. entity. You've gotten that W-9, you've received it, and you've verified it. And by verifying it, we mean you've run it through IRS TIN matching to make sure that the data on it is accurate. This will greatly reduce the number of B notices that you get at year end when you send out 1099s. And if you just make it part of your normal new vendor setup, it's not that much of a big deal. Just a few other things. The service is the same one that the IRS will use when they are verifying those 1099s that you send in, number 1. And number 2, best of all, my favorite, it's free. You just have to sign up for it, and register. Okay, I'll stop ranting about that. Factor number 5, that invoice includes a purchase order number or the name of the person who authorized the purchase, or ideally both. Now, why do we make such a big deal about this? Because many times invoices show up in accounts payable, there's no purchase order number on it, there's no name of the person who placed the order, and then in order to get that invoice, number 1, approved, and number 2, verified, the accounts payable team has to figure out who placed this order. And sometimes it's not that obvious. Now, you would think it would be a no-brainer issue for suppliers to automatically include that information on the invoice, because after all, well, they're sending out that invoice because they want to be paid, and they should make it as easy as possible for your accounts payable teams. But many times those invoices don't have it. And of course, if it's a fraudulent invoice, it certainly is not going to have a legitimate purchase order number on it. So good invoices include this information. And as a best practice, we tell accounts payable organizations, if they don't have it on, you should send a very polite letter or email with that invoice, return it to the person who sent it to you, the supplier, saying that you require this information. Hopefully, if it's a criminal, they won't try and supply it, they'll just go away. But that's not a guarantee. But it's one way to get rid of a few of those fraudulent or phony invoices. Okay, factor number 6, the invoice has been approved. So typically, invoices will come into the accounts payable team, and because it has that purchase order number on it or the name of the purchaser, the accounts payable team will know who to send it to get approval to go ahead and pay it. And once it's been approved, then it comes back to accounts payable, and the accounts payable team can then verify the accuracy of it. So no, they don't just automatically take the approved invoice back and pay it, because the approver just kind of says, yes, I ordered this stuff. But what they're not doing is checking that the invoice is correct. I mean, a few of them might, but 98% of them don't check that the invoice is correct, or sadly, they don't also check that the invoice has not already been submitted. So if it's a duplicate, they may just look at it and like, oh yeah, I ordered that, approved for payment, forgetting that a week ago they approved the same invoice. So the approval, it goes a long way to verifying that it's a legitimate invoice, but it doesn't go that last mile, which your accounts payable team will. Okay, factor number 7, and I got to tell you, a lot of people completely ignore this one, and some of them get away with it, but you don't want to be the one who doesn't get away with it. Okay, and what is that? This is that they also, the supplier who sent you that invoice is not on the OFAC list, which is part of the Department of Treasury. And this is a list of what's called specially designated nationals, of entities that the U.S. government does not want, what they call U.S. persons, includes companies, doing business with, or more importantly, making payment to. So ideally, you would have checked that the supplier wasn't on the OFAC list before you placed your order and you set it up. But Department of Treasury is continually updating this list and adding new suppliers to it, so they may not have been on it initially, but they could be on it today. Let me give you a simple example. You may remember that this became an issue when Russia invaded the Ukraine. Certain Russian entities then were put on the OFAC list, and this created a little bit of problem for a few U.S. companies who had been doing business with them legitimately. From day 1 to day 2, they went from being okay to do business with to not okay to do business with. So hopefully your supplier is not on it, and that makes the invoice good. You are supposed to, by the way, check before you make every single payment. Most organizations will check when they first set the supplier up, but not on a regular basis. But let me just say, if your team is watching the news, for example, and when we saw Russia invade the Ukraine, and they might think that something has gone on that might put one of your suppliers on it, maybe then they would have checked. Okay. And now the last, and this is the biggie, a good invoice is one that is accurate. And making sure that the invoice is accurate is a lot more complicated than it might seem. Yes, the invoice has been approved, but that doesn't mean that it's accurate. For example, the quantity might be wrong, the price might be wrong. All the goods that are on the invoice, even if they were on the purchase order, may not have been received. So your team needs to check that they were all received and that none of them were damaged. And also if there are any other special terms, like for example, if the supplier was supposed to pay for customization, maybe you ordered pencils and your company wanted its name or its logo put on the pencils, and that was included in the purchase price. You want to make sure that the invoice doesn't say customization. Or it might have said that the supplier was, for example, was supposed to pay for freight, and now they have a freight charge on it. Or there could be a million other other things. So you want to make sure that the invoice is accurate. Hopefully, I'm giving you a little flavor of it's not quite as simple as it might seem. So the first step in fraud prevention is strong internal controls. Don't underestimate the importance of these. They are the foundation on which your entire accounts payable process is built. Effective control in accounts payable boils down to one simple thing: the details. I've identified a baker's dozen of places where controls often go awry in the accounts payable process, and will explain how this happens when it's often not that obvious at first glance. While it's great to be a big picture person, there's definitely a place for that, ignoring the details and your profits go out the door. Let me explain. Control weaknesses, especially internal controls, are the tiny cracks in your foundation. And as you know, tiny cracks become bigger cracks, and if not taken care of, can bring a whole entire building down. In the business world, this means losses, which sadly will grow and have the potential to eventually torpedo the financial viability of your organization when criminals recognize them and take advantage. Let's get started looking at the promised baker's dozen of control weaknesses, including those that many don't realize they have. Control weakness number one: ineffective training. When you hire someone, especially when you hire someone to work in accounts payable, you need to train them on how you want to do things. If you don't, they'll do things the way either they think they should be done or the way they did them at their old company. Either of those may be fine, but they may not be fine, and inevitably they will introduce weaknesses into your process, which will result in duplicate payments, duplicate invoices being paid twice, and other control problems. Control weakness number two: not using a coding standard. Now, some people think that as we are moving towards automation, the use of a coding standard or requiring that your folks use a coding standard when they're entering data in the accounts payable is not important anymore. It is, because even those companies that are highly automated in their accounts payable function still have a certain amount of data entry, and that you don't want your processes introducing errors into your system because they didn't use the coding standard when they are entering the data on those few items, whether they are resolving discrepancies or they're handling those few invoices that were not sent in through your automation process. So you still need that coding standard. Control weakness number three: not standardizing your process for handling invoices when you're getting them ready for payment. By standardizing your processes, that means that if an invoice comes in a second time and you handled it the first time and I get it the second time, if I'm doing the exact same steps, I'll quickly recognize that this is a duplicate and I won't set it up for payment a second time. So standardize your processes. Not only that, when you standardize your processes, you can make sure that all the controls that need to be in place are in place and you don't stand the risk of somebody missing an important step. Hey guys, I just realized I didn't introduce myself. I'm Mary Schaefer, founder of this channel and the AP Nail podcast, which now has over 600 episodes. And I hope when you're done with this one, when you're finished with this one, you'll listen to a few others or watch a few others. I've also written over 20 business books, most focusing on business and accounts payable issues. But enough about me. Let's go on to and talk about control weakness number four, which is not using that coding standard in the master vendor file when you're setting up new vendors. It's just as important, and maybe even more important, that you use this coding standard that should match your invoice coding standard so that when vendors are set up in the master vendor file, your processes will be able to easily find them and they'll be able to match them to the invoice, and you don't end up with duplicate vendors in the master vendor file, because that is a prime way that fraud is facilitated, number one, and number two, that invoices get processed twice. Okay, so use the coding standard when setting up vendors, both new and when you're making changes in the vendor file. Control weakness number five: allowing multiple people to make changes in the master vendor file. Now, We haven't talked about appropriate separation of duties, and don't worry, you're not going to get through this without me doing that. But when it comes to master vendor file, there should be a person who's responsible for that, or two people if you're a large enough organization, and no one else should be going in the master vendor file. Too often we'll see a processor going in and making like an address change or a bank account change. You don't want to do that, because then you know too many hands in the pie, not appropriate separation of duties. So make sure that all changes to the master vendor file are made by the person who's responsible for it, and no one else has the ability to do it. Even not only that they're not supposed to do it on a regular basis, but they don't have the ability to do it. Because if they do, and they are a devious mind, they could go in and make changes that would result in a fraudulent payment. Okay, along the same lines, control weakness number 6, not regularly cleansing the master vendor file so that you get rid of inactive vendors that you are not doing business with anymore. You don't want to get rid of that information. You just want to deactivate their entries so that nobody can use that file, that inactive file, if you will, to push through a fraudulent payment. So regularly cleanse the master vendor file. Otherwise, it gets too big and unwieldy, especially if you had a lot of one-time vendors in there, which some people put in and some don't. But I'm getting off topic, and let me get back topic to control weakness number 7. Not doing a periodic review of how your processes are doing their work to ensure that they haven't introduced shortcuts which also introduce weaknesses into the system. Not to say that all shortcuts will introduce weaknesses. Some of them will be true shortcuts and a benefit for everyone. But oftentimes what the shortcut does is it makes the person who creates it, makes their job a little easier, makes their job go a little faster, but at the same time it does that, it can either creates a control weakness someplace else within the process or creates a problem for somebody else. So you want to, if they have a shortcut, if they have a suggestion for a shortcut, that's great. You want to sit down, you want to talk to them about it, and if it is truly a good idea, then everybody should use it, not just them. But oftentimes, as I say, when you review it and you can see the big picture, remember I told you there's a place with big picture folks, when you can see the big picture, you'll realize that this is not a good change. And then you can explain to them why it's not a good idea, where the problems would come. Okay, control weakness number 8, understanding vendor credits. Now, if you're the manager, you probably understand vendor credits very well, and you will recognize them very well also. But if you're new to accounts payable or new to accounting, or even if you're not new, if nobody's ever explained them to you, the staff probably won't recognize the vendor credit, and more importantly, won't know what to do with it. So when a vendor credit comes through, because they often do look like invoices, they will go ahead and pay it. So you want to make sure they understand vendor credits, they know what to do with them, and of course you want to try and collect as many of these as you can, because that's money owed your company and you should get it back. Control weakness number 9, not employing verification routines so that you don't pay a supplier twice. First of all, if you pay somebody twice, by mistake, it happens. Number 1, in all likelihood, they won't return the money. They may issue a vendor credit, they may not issue a vendor credit. Even if they do issue a vendor credit, you may or may not get it. There's a variety of reasons for that. But even worse than all that is there are a few suppliers out there who, if you pay them twice, they'll say, these guys don't have their act together. Maybe I'll try and get them to pay us twice more frequently. And that is what they will do. So you want to employ routines to make sure you don't pay twice. You want to do some verifications, and then you want to do some after the fact checking. Now, before we get to our last few control weaknesses, I'd like to request that if you're getting any value from this, that you hit that thumbs up or like button. It helps us get wider distribution on our talks, which in turn provides us with the necessary collateral to make more talks like this to help you. Control weakness number 10, vendor inquiries, not taking them seriously. You want to make sure that you understand all the calls that are coming in from your vendors. Sometimes you'll have vendors who will try and manipulate manipulate your processes. They'll either bully them into paying them twice. A few of them will. Of course, they don't say pay me twice. They'll pretend that they haven't been paid at all and then try and get the processor to issue a second payment without spending the appropriate time verifying that the first payment wasn't made. And the second thing that occasionally you'll see a vendor doing is they will try and get a processor to pay them early. And while that's certainly nowhere near as damaging as having somebody paid twice, it is not in the best interest of your organization, and they shouldn't be doing it. So they'll either pull on their heartstrings, oh, I need the money, or they'll say something, oh, that payment was supposed to go out, or whatever. They just kind of cajole the process into paying them early, and you don't want this. I could talk a lot more about that, but I won't. You get where I'm going. Okay, control weakness number 11, not requiring mandatory vacations. Every organization should have a policy that anyone who has anything to do with their money takes 5 consecutive days off, during which time somebody else does their job and they are out of the office. You don't want them being out of the office, working from home, and then doing their job from home, because that negates what you're trying to achieve. What you want to make sure is that there's no fraud going on, actually, but you really don't want to say that. And so somebody else does the job, and the feeling is that within the 5 days, if there was an ongoing fraud, that it would become uncovered. Now, many companies don't have this policy, mainly because they are, people take all their vacation time, but you don't want someone, even though I understand why they might like to do it, if they get 2 weeks vacation, taking, every Friday in the summer off, and they just have some long weekends because they didn't plan to go anyplace. Well, that's nice. It doesn't cover you on your 5 consecutive days off, so you want to do that. Control weakness number 12, I promised it was coming, not employing appropriate separation of duties. And this is getting harder and harder for more companies as our accounts payable departments use more and more technology, and they get smaller and smaller. It becomes harder and harder to employ appropriate separation of duties. But if you don't, you will end up, or you could end up with a situation where a person has access to 2 legs of a transaction, and if they have a devious heart, then they are more apt to make it easier for them to commit fraud, if that's how they are so inclined. And while most of your people absolutely will not do that, you don't know who will. And in fact, that brings me to control weakness number 13. I call it the myth of the long-term trusted employee. Most employees who've been with you for a long time are very honorable, so I don't want to give you the impression that there's not, but there are a few who use their position of trust, if you will, to have the appropriate separation of duties. They're not in place, and they have access to more things than they could, and a few of them will take advantage and rob their employer. And in fact, in most cases where there is an internal fraud, especially when that internal fraud is due to inappropriate separation of duties or weakened internal controls, it will turn out that it's a long-term trusted employee who has taken advantage, because they know where the weaknesses are, and you've kind of let your guard down and you're not checking them as much as maybe you're checking that new employee or that guy who you think he looks a little shady, even though he doesn't. He's a perfectly nice guy. So that's why I call it the myth of the long-term trusted employee. So your internal controls across the board, no exceptions, no matter how long someone's been with you and how much you trust them or you think they are honorable. Well, there are many, many steps an organization needs to protect itself against fraud. There are some very basic ones that you should incorporate into your process. Let's look at what they are. Issue number 1. I call this the issue no one likes to confront. I've been covering accounts payable issues for almost 25 years now. And whenever I mention this one, people get uncomfortable. Sometimes they give me dirty looks, but it is a fact of business life, so we need to address it, and we're going to address it now. When it comes to fraud can be both internal and external. That's right. It's not always some bad guy out there. Sometimes it is somebody that you know and actually like. This is why we make a big deal about internal controls across the board, no exception, because there is what I call the myth of the long-term trusted employee. Now, most long-term trusted employees are quite honorable, and they would never think of doing anything to harm their organization. But there's always that one bad apple. And in fact, surveys from the Association of Certified Fraud Examiners have shown year after year that when there is an ongoing fraud committed by an internal person, an employee, it inevitably is that long-term trusted employee, that person you think they would never do anything. I'm going to stop talking about this, but I want to conclude this little section of this talk, if you will, with a hashtag from my colleague Kelly Paxton. She came up with this, and she says hashtag trust is not an internal control. So anytime you hear yourself saying, oh, that's Joe or that's Jane, we don't have to worry about it, you're probably right, but you don't want to take that chance that you're not. Okay, issue number 2. This is one that I call the high alert issue. And if I was doing this talk even a year ago, I probably wouldn't have mentioned it, but today it is critical, okay? And that is when you're, going about your day-to-day operations, anything that occurs that is different or out of the ordinary, especially when it relates to your money, you need to stop, you need to question it, and you need to verify it. And it's the little things, because criminals are quite good at figuring their way around. Let me give you a very simple example. If normally you're the accounts payable manager and you're doing the wire transfers, and it's always the controller who brings you the wire transfer, and this time you get an email from the CFO with the wire transfer directly, not going through the controller, and it says something like, this is a rush, we need to hurry up and get it out. Maybe it is from the CFO, and maybe it is a rush and you need to get it out, but take a few extra minutes to stop and confirm, because I can't tell you how many times this little out of the ordinary that doesn't really seem that much out of the ordinary has been a fraud. Okay, issue number 3. I call this one yet another variation of this devastating fraud. And this actually happened in the town that I live in, so it's near and dear to my heart, or at least according to the newspaper it is. And the manager who was in charge was fired. So we all know that we verify all those emails that come in that have a change of bank account request, but you need to verify those changes regardless of how that request comes to you. So in this case, the hacking actually did not occur in the in the town's accounts payable system. It actually happened in the supplies and the accounts receivable department, or the billing department. And what the criminal did is they changed the invoices. So the invoices had a little statement on it that said, please send funds to our new bank account, and it gave the bank account number. And of course, people getting this, they received the email. It was from a legitimate source. It was from an invoice that they were expecting, and they went ahead and changed the bank account without verifying it. So even if it seems like it's ironclad, this has got to be accurate, go ahead and verify it. And because in this case it wasn't, and there was a lot of trouble afterwards. Okay, issue number 4. I call this the alert issue. You want to be alert for new frauds, and you want to be alert for them before you come victim. This is kind of a variation in the last tip, where the change of bank account now came on the invoice instead of the request coming through email. So keep in mind, criminals are really smart, or at least some of them are, and they look for weaknesses and they figure out ways to exploit them, ways that you and I would never have thought. So be continually alert, and if something looks a little odd, then you want to question it. Issue number 5. I call this putting on your hacking hat. Can you say that fast 5 times? Okay. Annually, you want to become an ethical hacker, or you want one of your employees to do that. You want to keep in mind that when it comes to taking advantage, your employees know where your weaknesses are. And when I say your employees, I'm including ex-employees. And at the end of the day, you never really know who is disgruntled, who is having financial issues, or what weaknesses they may exist. So once a year, put on your hacking hat and see if you can break the system, so to speak. See see if you can figure out a way that you could defraud the organization. And then, of course, if you figure it out, you want to fix that. A great way to do this, by the way, is if you hire somebody new, if you have a new employee, have them look through it, your system, and see where they see the weaknesses are, because they are going to look at things with a little different set of eyes than you would look at it, and they also, come from a little bit of different background. So it's really, that's kind of like getting a consultant for free. So don't overlook those new employees. Let them try and break your system. Okay, the next issue I call the non-discriminatory issue, and that is, I'm going to make it clear that when it comes to crime, everybody is a target, even in the corporate world. Okay, there's no exceptions. Criminals will take advantage of whoever they can. Some statistics from the Association of Financial Professionals showed that with these new electronic payment frauds, 61% of them were focused on the accounts payable staff. Okay, and depending upon the fraud, there's different targets, and I just want to go through a few of them quickly that we've seen in recent times. CFOs have had their emails either hacked or impersonated, and then an email is sent requesting a rush wire transfer. It's usually sent to somebody in AP or whoever within the organization is doing your wire transfers. CEOs have had their emails hacked and sending out requests for personnel information. In the most famous case, if you will, I hate to use the word famous in this example, but it is notorious that they got the W-9s. This problem has become so bad that the IRS issued a warning to all companies saying, as a best practice, anytime there was an email request from a high-level executive requesting personnel information, tax information, that should be verified before that information is sent, because there have been so many of these phony emails that unfortunately people fell for. The email came from the CEO or some other high-level executive. The employee wanted to look good, and so they immediately sent the information, unfortunately, to the criminal. Okay, your accounts payable department is getting inundated, and they continue to get inundated with both phony wire transfer requests, supposedly from the CEO or the CFO, as we've discussed, and also from criminals who are impersonating your true vendors, trying to get you to send a payment to one of their bank accounts instead of to the supplier, so they have to be verified. Payroll has been a target with these requests for personnel information, and then basically any employee. For the last few years, we have this gift card scam going on where the criminals send an email to different level employees asking them to go out and buy gift cards, and then the criminals can turn that into the information on the cards into cash, and either the employee or the company is out the money. Showing just how smart they are, one company told me they got hit several times with this fraud, and they couldn't understand it because they were updating. They were doing a good job at updating their employees, or so they thought. And then they realized what the criminals were doing is anytime they got a new employee who hadn't been there and seen the former alerts, they were targeting them. And of course, new employee, you want to look good, and you can figure out the rest. So now that organization had to make training about not falling for this gift card scam part of their new employee training. Okay, next issue. I call this the blabbermouth issue. I say this is the one time it's good to be a blabbermouth within your organization. Normally that's not a compliment, but as soon as you hear of a new fraud, spread the word and spread it quickly. Don't wait for the weekly staff meeting or the monthly staff meeting. It may be too late then. And as I hope I've managed to convey to you, it's important that you spread this word to everybody, not just the managers or the higher ups. Okay, so as soon as you hear about a fraud, even if it's one that you guys fell for, don't get hit a second time. Don't be embarrassed. Spread the word. And I love it when people tell me, because then I can be the blabbermouth and spread the word. Okay, and then the last issue, and this one, if only the employee had followed this, would have saved his organization $25 million. And this is trust trust your gut. Okay, I call this trust your gut issue. If something feels off, take a minute, step back, look at it, ask a few questions, make a few calls. In this case, it was a $25 million. It was in Hong Kong. The employee was instructed via a Zoom call that turned out to be a deep fake of the CFO to send money, which ultimately he did. But throughout the whole thing, he felt something was off. He couldn't put his finger on it, and eventually, when they figured it out, they went to the police, which is how I know about it because it was in the press, and unfortunately, the money was gone. But felt something was just not right. So, as you can probably tell from our discussion about these issues, use of the most current best practices goes a long way to protecting any organization against fraud. As we've alluded to, the face of fraud is evolving. There are some basic questions you can ask when you suspect fraud. These will help you ferret out new frauds. Let's see what they are. Virtually everyone has been targeted by fraudsters for some scam or another, and most of us multiple times. And this is true both personally and professionally. We've got 3 simple questions anyone can use to ferret out 95% or more of these potential frauds and scams. And when I say anyone, I really do mean anyone. And we've got some real life examples to show you how they would work. Question number 1. Does this seem too good to be true? When you're looking at a potential proposition, if you will, if the answer is yes, it probably is. And you should be extremely suspicious, whether it's a celebrity seeking a relationship, a famous person seeking money for an investment or other reasons, or, and this is important, if you have anything to do with your organization's money or data, a high-level executive suddenly requesting you do something like wire money or send confidential information that normally would come through another channel. Take a moment. It's easy to let it go to your head and think that you're special, and believe me, if there's somebody on the other end of this communication impersonating a famous person or a high executive or whatever, they will lead you to believe you're very special. But be cautious. Let me share a few recent stories. The first story involves something you may have heard of, a French woman who started talking to another woman who she believed was Brad Pitt's mother. The scammer then introduced the woman to the supposed Brad Pitt, and without going through all the gory details of the story, she eventually, over time, sent this person over $800,000. While making the story even more heartbreaking, the woman, when she shared this story, became the target of online trolls who were vicious in their condemnation of her. Okay? Now, along the same lines, scammers frequently will misuse images of famous people to promote their less than legitimate offerings. Some recent examples include the image of Martin Lewis, the founder of Money Saving Expert, to promote fake investments, as well as impersonations of Taylor Swift, Dolly Parton, and others. Several years ago, scammers took a legitimate video of the president of Google and used it to scam several YouTube creators. Now, I'm sure most of you know Google owns YouTube. So using the legitimate video made the rest of the email seem legit. But in reality, you and I could have downloaded that video and used it. A Texas woman also was defrauded for over $250,000 by the scammer impersonating Elon Musk. The scammer promised a high return on investments. In this instance, the police were able to apprehend the thief. If you have a LinkedIn profile, a Facebook account, or other social medias, you stand a high chance of being contacted by someone impersonating a famous person. On LinkedIn, for example, I supposedly have been contacted by Michael Bloomberg, the billionaire former mayor of New York City. And by the way, his fake profile included a picture which was of the real Michael Bloomberg, but it was very fuzzy. And of course, questions to ask yourself is, does Michael Bloomberg have a LinkedIn profile? If he did, would he use this fuzzy image? And number 3, would he use LinkedIn to contact somebody? And of course, when you stop and you think about it for an answer, for a moment, the answer is no. Okay, and also a Saudi prince, just so you could have a good laugh at my expense. Bottom line, if it seems too good to be true, it probably is. Question number 2. If your gut tells you something is not right, the odds are high that your gut is correct. So trust your gut, and at a minimum, do a little bit of additional research and verification. So let me share a recent story. Again, you have heard this, and this involved a $25 million fraud. A gentleman who worked for a company in the UK was sent a text. I think it started with a text, but it may have started with an email. He eventually got on what he believed was a Zoom call with the CFO of his organization, and the CFO gave him wire instructions over this call for several wires, but they totaled $25 million. As this whole thing was going on, something didn't sit right with him. It kind of didn't feel right, trust your gut. But he went ahead and did it because he got several emails afterwards, supposedly from the CFO, urging him to, hurry up and get that wire done. The reason he didn't pick up and call at first was he was in Hong Kong. The CFO was in, I believe, the UK. The time difference made that difficult, but his gut told him something was wrong, and eventually he trusted his gut and he went to the police. Unfortunately, it was after the $25 million was gone. So if your gut says something is wrong, at least investigate and do some verification. Question number three, ask yourself, what's wrong with this picture? So two examples recently that a number of companies actually have been involved in. The first one, and there was a whole slew of these, was emails supposedly from the CEO, but not really, going to either payroll or accounts payable, asking for the W-2 file. Now this seems innocuous enough. This is the file that's generally sent to the IRS with all the tax information for employees. It includes their salary information, obviously, and their social security numbers. And these were not from the CEO. They were from a scammer who took that information. They got tax refunds, and as you can imagine, the problems for the legitimate people whose information now had been stolen were humongous. So what you might want to say to yourself is, what's wrong with this picture? What would our CEO or CFO or who's ever supposedly asking for this information, what would they want with it? And the answer in most cases is they can't get far enough away from it. So there's something wrong with that picture. This scam, by the way, has gotten so out of control that the IRS has issued instructions, best practice instructions, telling people that any time they receive a request for any sort of personnel information, it should be verified before it is sent. Because, think about your CEO. Would he or she want anything to do with this information? No, they delegate it. They have more important things to do. Okay, the next example of this is the gift card scam. And this didn't involve the huge amount of money, but a lot of times it was directed at an individual. And so, a few $1,000s to an individual, that can be a lot of money. And so in this example, the person received an email, again, supposedly from either the CFO or a higher level executive, asking them to go out and buy gift cards because maybe there was a party coming up and the executive wanted to give out the gift cards at the party. Now, to be honest, especially if I was a new employee and I'm trying to impress, I probably would have fallen for the first part of the scam, and I would have gone out and bought the gift cards. Anyway, the person goes out, buys the gift cards, gets back to the office, and then they get another communication, not a phone call, usually an email, but it could be a text saying, did you get the gift cards? And you yes, I have them. And this is the part that should have made somebody stop and say, what is wrong with this picture? The person then says, can you scratch off the silver stuff on the back and give me those numbers? And with those numbers, the criminals can then turn those gift cards into cash. The gift cards become worthless, and of course, you're out the money that you paid for. So that's the part, what's wrong with this picture. No matter how good an explanation they give you for this, you want to, again, pick up the phone and call. Okay? So 3 simple questions. Does this seem too good to be true? Is your gut telling you something's wrong? What's wrong with this picture?
Yeah.
As the entire business world and processes evolve, there are some new issues to be addressed, ones we didn't typically look at in the past. This is especially true in your accounts payable function. Let's take a look at some of these challenges. These unexpected challenges can throw a real monkey wrench into the daily operations of any well-run best practice organization. Unexpected challenge number one, the big remote work versus return to office mandate. You've seen a lot about this in the popular press. Many organizations who formerly had allowed their employees to work remotely are now mandating that they return to the office. Now you may think, no big problem. I don't care. I'll go into the office. But that's only the beginning of the battle. It may not be a problem for you personally, but for example, your star performer, that person who you rely on, they may prefer working from home. In fact, they may prefer working from home so much that they go out and look for another job and you could be left holding the bag. That's just one way that it could hurt you. They could also, not only your star performer, but all your employees could come in and they're angry that they had to give up what they consider to be their right to work from home. And so they're less productive and they grumble about it. And then some mistakes get made. Now, that's one side of the coin. The other side of the coin are those organizations who want their employees to work from home. Maybe they have given up the office space, so they no longer have enough offices, enough desks for everybody to come into the office, and you have employees who would prefer to go into the office. So there's no one size fits all here. You could be dealing with a lot of different moving parts. And even if everything's fine in your organization, nobody's upset about what's going on, you're either all working from home or you have a hybrid relationship or whatever, and then you get a new boss. And whatever the situation is that you're all happy with, this new boss isn't happy. So even though, for example, and this happened to me years ago, even though the company is perfectly willing to have everybody work remotely, this new boss doesn't like that. He or she doesn't trust people when they can't see them, and they want everybody to come into the office. So your formerly nice, serene working environment now becomes one where you have disgruntled employees. So there's many ways that this remote work versus return to the office mandate can play out, and the challenges that you end up having because of it, will vary depending upon what the situation is. What's more is they can change from time to time. Okay, you get where I'm going with that. Enough about that. Unexpected challenge number two. You can have regulatory compliance issues that you had not had in the past and that you don't see coming. And to be honest, we've got a lot of change going on in that area. Clearly, the regulatory challenges vary from country to country. And now some of this is even politically driven, which is something that we didn't have in the past. So, for example, let's talk about what's going on in the United States. That's one example to give you a flavor for what's going on. So the IRS, the taxing authorities in the United States, Internal Revenue Service, as you may recall, a few years ago, they received a budget increase to increase hiring. But now, and most of us were concerned that there would be increased audits. We were maybe a little bit concerned about our 1099 processes. But now we have reports in the press that there are going to be layoffs at the IRS, as long as, some other federal agencies. Likewise, there was an expectation until recently that the due dates for all 1099s, the due dates at the IRS, not the end user, not just the NEC, but that they were all going to be moved to January 31st to help combat the fraud that's been going on. Now, it's not clear whether that's still going to be an initiative with all the upheaval going on, but we just have to wait and see. And we're not clear what's going to go on actually with any federal agency. But there are two things that are absolutely certain. Number one, your AP staff needs to stay on top of this matter, for there will be changes, for better or worse, I don't know. No one really knows. And more importantly, and getting far less less press. In fact, we rarely read about it in the newspaper or the popular press anywhere, of the growing regulatory compliance requirements at the state level. That's right, at the state level. So, for example, many states now have their own, separate from the IRS or the federal level, 1099 reporting requirements. And the number of those states that have those requirements is going up every year. A few more added. And you may think, well, we subscribe or we participate in the combined federal-state reporting, and so we can get that information that way. Well, there's several problems there. Number one, some of the states have been dropping out of that program, so you can't rely on it the way you could in the past. And number two, some of the states who are participating have separate reporting requirements, maybe a little bit more stringent or just different than what the IRS reporting requirements are. So your ability to rely on that combined program, which is great, by the way, in theory it's a great program, is not the silver bullet that we had hoped it would be. So we've just got to keep our eyes and ears opened, especially for the next few months, the next year, next 2 years, to see if there are any increased reporting regulatory requirements that we're going to have to deal with. One other one that I want to make you aware of on this particular level is, you may recall that a few years ago the IRS changed the deductibility of meals from your taxes. Now you can only deduct 50% of the value. Well, that's expected to expire this year, and it's not clear at all as to whether that is going to be extended or it's just going to be allowed to expire quietly, and we'll go back to the old 100% day. I can't tell you. I don't know. I wouldn't even fathom a guess as to what they're going to do. Alrighty, moving along. Unexpected challenge number 3, keeping current, which is always a challenge, but we've got some little nuances now moving forward that make it an interesting situation. We're not only talking about the changes that are happening in whatever your specialty is. Is it, general ledger? Is it particular software? Is it Excel? Is it accounts payable, accounts receivable, whatever? But we're also talking about all the new technology, all the new automation, and the AI solutions, the artificial intelligence solutions that are flooding the market today. No one, I mean absolutely no one, can afford to ignore these changes. We've got to adjust and adapt. We don't need to stick our head in the sand and pretend it's not happening, or run around like a Chicken Little with your head cut off. No, we need to adapt. I want you to consider 3 what I consider to be interesting surveys and facts. I'm not going to go into them in detail, just a little highlight from each of them. So number 1, according to the World Economics Forum and their report, The Future of Jobs, an estimated 44% of core skills required by the workforce today will change within the next 5 years. Okay, 5 years. Okay, really short time period. The second one, which I thought was quite interesting, and this was according to research from an organization called Kahoot, and they said in their survey, 46% of all employees feel their skills will be obsolete within 5 years, and 29% said it will happen even sooner. Again, we've got to adjust. And lastly, number 3, this came from Microsoft and LinkedIn. They released a joint report, which they surveyed, I believe, 31,000 people about the state of AI, artificial intelligence at work. And there was a lot of interesting tidbits in that survey, but the one that I want to focus on here, and I think should be important to all of us, is 2/3 of the leaders, people who were identified as leaders in this survey, said they would not hire someone without AI skills, artificial intelligence skills. And this was not, we weren't just talking about technology people, we're talking about the workforce in general. Does this mean you're doomed? Absolutely not. I do not believe that, not one bit. It just means that you need to stay on top of the type of of skills that we traditionally left to others, primarily those IT geek. But today that just doesn't work, okay? To some extent, we all have to become IT geeks of sorts. And you know what? A lot of this is not difficult. In fact, once you get the hang of it, and I can tell you from personal experience, a lot of this is not difficult. In fact, it's not that hard at all for you to end up being one of the top candidates that management wants on their teams because you have mastered some of these skills that we've been talking about. Hopefully by now you understand that managing the accounts payable function is a lot harder than it looks from the outside. Many new managers are shocked at some of the issues, things that they never expected. So you can avoid a similar fate. Click on the link that has appeared on your YouTube screen and is in the description to learn what these issues are and, more importantly, how to deal with them so they don't derail your career. Good luck.